Welcome back once again. Happy holidays and soon to be happy new year. And thank you for watching my channel and over the years. And once we conclude this video, I ask you once again to, if you see the value of this video, please smash the like button and subscribe to my channel. With that in mind, let me go ahead and this is Siwon Yi. With that in mind, let me go ahead and go over the title of this particular video, which is come from the National Association of Realtors, and this article came out December 21st, a mere few days ago, and it talks about existing home sales dip 7.7% in November, and the key highlights is that the existing home sales fell for the 10 consecutive months to a seasonally adjusted annual rate of 4.09 million. Sales slipped 7.7% from October and 35.4% from the previous year. So this is a head scratcher. So for the past 10 months, we're talking right now is December. So early February of 2022, the existing home sales fell. Now, we're not talking about home prices dipped. There's a big difference. You have to really understand the careful worded vocabulary. So don't want to sound like everybody else's negative headlines out there with the YouTube videos, with the clickbait types out there, and you know who they are, and I know who they are. So only home sales has fell for 10 straight months since around February 2022. That's at that time the mortgage rate was still quite low, around like the mid threes. So the interest rate did not skyrocket until I believe back in April and May. But I will look in the mortgage news daily. You'll see the average daily rates of mortgages. I should have shared that screen with you, but I don't have it. So let's go without that for right now. All right. So the second highlight is the median existing home sales price rose to $370,700 and of 3.5% from a year ago. So year over year, in November, we have seen housing price increase at 3.5%. And some of you, the data, perhaps, one more month, we may not see 3.5% year over year appreciation increase. The inventory of unsold existing homes retreated to a fourth straight month to 1.14 million at the end of November, or the equivalent of 3.3 months of supply at the current monthly sales pace. 3.3 months supply, to me, it is a historic low supply of the inventory. So I see a demand exceeding supply, even though the demand has subsided over the past year. So this is a 3.3% months of supply is very, very concerning. And if this means 5 to 6 months supply of homes is a balanced market. We're far from a balanced market. We're still at a seller's market. Some of you may not believe that, right? Some of you, we already turned the corner. No, 9 months of decreasing home sales does not necessarily turn the corner of the supply and demand imbalance. So I will go over more of that. So there's still very much a seller's market. And if 5 to 6 months is a balanced market, at 3.3%, 3.3 months of supply of inventory, if there are no more homes coming to market, then in about 3.3 months from now, there'll be no homes for sale at all in the country. So sounds very damaging. But anyway, the first paragraph on this article dated December 21st by NAR is this home sales have declined for the 10th straight month due to rising interest rate. that's pretty obvious. The Federal Reserve is pretty much destroying the housing market so far, at least temporarily. According to the National Association of Realtors, all 4 major U.S. regions recorded month-over-month and year-over-year declines. Just because housing sales has declined does not mean we're having a major house correction or housing crash. That's furthest from the truth, and I will go over that momentarily. So the data so far I'm articulating to you is not doom and gloom. The sky is not falling. All right, it's just we're going through a very rare housing correction. What does that mean? That means 10% decline temporarily year over year. We're seeing, especially the more expensive markets in California and the western region of the U.S. But bear in mind there are 400 MSA, metropolitan statistical areas in the country, and there are more than 3,000 counties in the U.S. and there are more than 9,000 homes. So real estate is hyper local. So each real estate market is very local in it of itself. So you cannot paint the picture of a national real estate market, right? So just want to share with you about that before we'll continue with this article. So anyway, in essence, residential real estate market was frozen. I'm going to use the word frozen. Yeah, frozen, just like the weather is frozen this December. I mean, we have record low temperatures throughout the U.S. And you've been hearing about that. It's just very interesting. So not only the weather has been frozen in December, but the housing market was frozen in November, resembling the sales activity seen during the COVID-19 economic lockdowns in 2020, said NAR chief economist Lawrence Yun. And the principal factor was the rapid increase in mortgage rates, yes, from 3.5% the first quarter of 2022 to right now around 6.3% as we speak. And this is the 4th week of December as I'm recording this video. So many homeowners have reduced incentives to list their homes. And I will discuss more about that toward the back end of this video. Plus, available housing inventory remains near historic lows. Now, this is a head scratcher. I want you to, I'm emphasizing remains near historic lows. As long as supply of inventory remains at historic lows, we are not going to see a housing crash. I might be bursting some people's bubbles out there. As you're watching this video, if you're hoping for 30, 40, 50% drop in housing prices so you can enter the market, it says you want to time the market to enter. Well, you guys out there, you may be waiting for a very, very long time. Clearly, the historical data are very clear. If you have a 3.3 month of supply of inventory, you're not going to see a crash. In fact, you may, projecting forward, in my personal opinion, we're going to see at least a 0% appreciation rate in the next few years, maybe a 2 or 3% appreciation rate, because once the demand picks up, once the mortgage rate are come down to 6% or even 5.5%, next year, 2023, then the demand will pick up drastically, and we're going to still have low supply of inventory. Economics 101, when demand exceeds supply, housing prices will rise. So mark my words, this video is another documentation of my video representation and the predictions I'm making. By no means I have a crystal ball. None of us have, but I'm just making a prediction, just a lot of people are. So I'm entitled to my opinion, as you guys are. So anyway, so let's go further down here. Unsold inventory sits at 3.3 months of supply. And let me see what else. The median existing home price for all housing types in November was 370,000, an increase of 33.5%. So we're still seeing a little bit of appreciation, although in many markets, the house reductions in, especially in expensive market, you can make the argument that for 2022, there really are no appreciation, even though in the middle of this year, around May or June, according to Redfin, as I share the data I shared with you, they were like 20% year over year increase in appreciation from 2021 to 2022 back in May. But now the prices have reduced in some markets, in expensive markets, especially California and a few other places. That will, at the end of the day, a few more months of lagging. This is a lagging indicator. This report in the first quarter of 2023, we will see as we recap the 2022. I suspect the housing appreciation for 2022 nationwide, that is, will be pretty much zero. Okay. All right. So let me see. First-time home buyers are responsible for 28% of sales in November, which is not bad. Almost a little bit more than a quarter of home buyers are first-time home buyers. So that's good. There's still some opportunity for first-time home buyers, which is good for you, because during the pandemic last year, 2021 and 2020, many of you were shut off from the market because of the multiple offers and bidding war from many people due to the skyrocketing, due to the historic low interest rate that brought out so many buyers back in 2021. So first-time home buyers were shut off, but now there's a small window of opportunity for first-time home buyers to pull the trigger right now if you can do it, if you qualify. So all cash sales accounted for 26% of the transactions in November. So there are still more than one quarter of home purchases were done with all cash, according to NAR. So that tells me that many wealthy, deep-pocketed buyers still have the money, still are very, very optimistic about the housing market. So they do not mind pulling all their eggs in one basket by buying homes with all cash purchases. Okay, so those are very upscale buyers. Individual investors or second home buyers who make up many of our cash sales purchased 14% of the homes in November, down from 16% in October and 15% in November of 2021. So slightly down. So just a temporary halt because again, the higher interest rate has caused the yield for investors to be lower. So they are so therefore you're seeing less on a percentage basis year over year for real estate investors buying homes with all cash. But again, to me, being a real estate investor myself, this is my space, and I have consulted with thousands of real estate investors for several decades to buy cash flow homes. I understand that space, but investors will always pull the trigger in real estate market because they have a long-term horizon, and especially when they buy in the affordable entry-level homes in a specific parts of the U.S. market, such as the Midwest and the South and Southeast, where you will find the lowest affordable homes where investors can cash flow with the rent to value price ratio. So anyway, so let me see what else. According to Freddie Mac, the 30-year fixed rate mortgage is around 6.3% as of December 15th, which is down from 6.33 last week. And remember back in October, a couple of months ago, the mortgage rate were at 7.3%. So we have a full whopping 100 basis point decrease from 2 months ago, when the mortgage rate averaged around 7.3% in October versus now 6.3% in December. So therefore, still some some kind of a pent-up demand just a little bit from buyers because of the lower of the interest rate to 6.3%. The market may be falling since mortgage rates have fallen for 5 straight weeks, Young added. So the average monthly mortgage payment is now almost $200 less than it was several weeks ago when the interest rates reached their peak for this year, something I just discussed with you. All right. So the Realtor.com's market trends report in November shows the largest year-over-year median price growth occur in some off-the-wall markets, which I have no clue. We have seen some increased price growth in Milwaukee, in Memphis, in Miami, and what have you. So, however, a number of Western region markets have drastic decreases in price reductions. So single family and condos, let me see what's going on. Single family homes adjusted on a seasonally rate of 3.65 million November, down from 7.6%. And the median existing single family home prices was 376,700 in November, which is up 3.2% from November 2021. And for the most of this year, prospective home buyers have faced the dual challenges of elevated mortgage rates and limited housing inventory, said NAR President Kenny Parcell. Yep, that's what's happening. Regional breakdown. This is what's going on in a regional breakdown, because I really like it when you do a regional breakdown, because there's no such thing as a national real estate market. All real estate market is hyper local, down to the city, down to the suburbs, down to the neighborhood, down to the house in a specific block, in a specific neighborhood, down to the PIN number, the lot number. That's how local real estate is. So in the Midwest, the existing home sales retreated to 5.6% from the previous month, an annual rate of 1.02 million in November, falling 30.6% from a year ago. The median price in the Midwest was 260,000, up 3.9% from November 2021. So now you know the median price in the Midwest is still very, very affordable. That's why I see some move up housing market activities in the Midwest, not only recently, but I believe in the next few years, as many potential homeowners are being priced out of the market due to skyrocketing of home prices. I believe there will be another, like a minor migration pattern, if you will, of people going to more affordable markets to buy a home to live, such as the Midwest. So I see some surprising upward growth in many Midwest region of the U.S. due to low home prices and affordability. Because yep, I'm sure you know what I'm talking about. In the South, existing home sales have dwindled to 7.1% in November, and whereby such that there's a 35% decrease of annual sales from the previous year. So, yep, that's what's happening in the South, which is, in my opinion, the South has the fastest growing region in the U.S. due to many reasons. So the median price home in the South was $340K, an increase of 4.4% from this time last year. And in the West, which is different, existing home sales in the Western region of the U.S. fell 12.5% to an annual rate of 700,000 November, down a whopping 45.7% from a year ago. And the median price in the West was $569,800, a 2% increase from November 2021. So the West region experienced the largest decline in home sales and the smallest increase in home price compared to the other regions of the country, Yoon said. Yep, that's what's happening. So So we all know, I mean, I live in California now, San Francisco Bay Area for almost 3 decades, more than 3 decades, and I've seen over the years huge price increases, uh, but and very volatile markets. But home prices are so expensive in a Western region, especially in California. But we see some up and down, but it doesn't affect me that much because I, I I buy and hold for the long term. I don't panic, or I show a lot of discipline over time. So that's why I'm able to buy many primary homes in California for the past 3 decades, and go out of state to buy very cheap rental properties for cash flow purposes in very affordable markets and prudent markets in other part of the country, like the Midwest and South and Southeast. That's where the numbers make sense. So my takeaway from this thing is such that we're going to do a slight correction. But when I look at the 3.3% supply of inventory, that is like Lawrence Yun just said, by the chief economist for NAR. He said that we are reaching at a historically low supply. Now, some of you are going to confront me and make an argument that, there are a lot more inventory coming into the market recently in November, December. Yes, but still, the inventory is still at extreme shortage moving forward. All right, so okay, let's conclude with a few more slides. I want to show you. Although the interest rate right now is around 6.3%, it's no reason to panic, because if you look at the history of interest rate, the mortgage rate was around 18%. The mortgage rate was 18% back in the early 90s. Only the past 20 years, the mortgage rate was less than 6% or so. So you guys are, many Americans are spoiled by the low interest rate for the past 20 years. But prior to the past 20 years, you have seen 18% mortgage rate to 10%, 8%, 7%, all through the 1980s, 1990s, up until the early 2000s, when the mortgage rate steadily declined. So therefore, many homeowners are able to pull the trigger over the past 20 years, over the past 3 years, and they have done very, very well. But with that said, as I quickly go over this, but ever since the last housing crash in 2008, we have seen very, very few new homes that are being built. As you can see by this chart, from 2010 to 2019, there were only 5.8 million homes are being built by the builders, compared to the more than 20 years ago, when there were overage of supply homes. Now, the past 10 years at least of lack of home construction is potentially causing a massive housing shortage. Some organizations state that we are short 6.8 million homes. And another organization state that right now, even as we speak, 2022, there were a mere less than 1 million homes that were being built annually, and we need 1.3%. So we are at least 50% below the level of homes that are being built to accommodate the rising population. And the worst off, I mean, for those of you who have tunnel vision, the projection from 2021 to 2031 for the next 10 years, we need 2.5 million homes to be built to accommodate the rising population, and we're not even close to that range. Even with the high mortgage rate and with the lower demand that we have seen for the past 9 months, still the supply of homes are projected to be very, very low, not only for in the next few years, from 2023 to 2024, but most likely for the remaining decade of this decade. So I'm not going to go over too much. So some of these articles, as you can see, a lot of data shows that we are extremely short for this coming decade, and still many unsophisticated YouTube watchers out there, you're thinking you're going to wait until a housing crash 30 to 50% before you jump, you buy a house. But let me give you a reality check because 40% of the U.S. homeowners out there, they have no mortgages. They are free and clear, so they're going to sit on their free and clear with substantial equity. U.S. homeowner equity surges to over 27 trillion as the value of housing stock passes 39 trillion. For those home buyers over the past 10, 20 years that have purchased their home, you're sitting in a massive amount of equity. You are creating generational wealth for yourself and your family and for generations to come. So it pays to become a homeowner long term. So in order for you to have a housing crash, you need to have stressful sellers. And I do not see any stressful sellers. And this data back it up. 9 out of 10 mortgages have an interest rate below 5%. And the sellers are locked in. They're not going to sell their home locked in at 3.5% mortgage rate to buy a move up to buy another home for 6.3% and having to pay double the mortgage payment just to move up to buy a new home. So until interest rate or decrease drastically in the next few years, the home sellers gonna hoard their mortgages forever, and they're not gonna sell. 11 million people have mortgages of less than 3.5%. 13 million Americans homeowners have 30-year fixed rate mortgage of less between 2.5 to 3%. 4.7 million homeowners have 30-year fixed rate mortgage of 2 to 2.5%. And I cannot believe this, 285,000 homeowners have mortgage rate, 30-year fixed rate mortgage rate of below 2%. How is this possible? Even myself with a very high credit score, I don't have any mortgages that are less than 2%. Anyway, so this chart basically tells you that the total inventory of sales, according to Alto's research, right now are at a very, very low level. Historically speaking, even when the inventory have recently have risen slightly year over year, the fourth quarter of 2022. But if you compare the past 7 or 8 years, we are still at a very low supply of inventory. We are around 50% below the level that we need in order to have a balanced market. So, and let me see what else I need to show you. Okay, this chart tells you the median home prices according to Alto's research on U.S. single-family home. Just going to show you it pays to be a homeowner. It pays to buy a house at any given moment because if you just look at this chart, look at the steady home prices have risen over the past 6, 7 years. I know some of you are going to say, yeah, many houses have reduced their prices by 10, maybe even 15%, especially in the expensive markets in the U.S., such as in California and the Pacific Northwest. But many markets are still doing well, and prices are not decreasing, especially in the South and Southeast. Florida, Texas is doing very well, and there's a slight correction in some of those markets in the area, in that region. But the Midwest markets is a very low price, and they have not gone through the peaks and valleys. They have not gone through the pandemic skyrocketing home prices. So the Midwest markets are doing very well, steady growth, boring markets, but they are the playgrounds for mom and pop real estate investors. That the market that I use to help our investors to buy in those markets to achieve cash flow with 25% down payment. So my takeaway from this National Association of Realtors, yeah, we see home prices decrease just a little bit, a minor temporary correction, hopefully. And if the interest rate falls back down to 6 to 5.5% mortgage rate for 2023, hopefully by second quarter 2023, we should have a very good housing activity going on. So people gonna get off the sidelines and start buying houses, hopefully by the second quarter of 2023. in my estimation. So this National Association of Realtors article pretty much stated what I believe too, that we've gone through some slight corrections, but no way is a housing crash. The demand is still there. The millennials, 78 million millennials, are in their prime buying, purchasing years of their lives. So I expect to see a lot of people coming back to the market, especially when the interest rate comes trending downward. And as long as the economy is still doing well, as long as the unemployment rate is, if it's less than 5%, then we should be okay. Even if there's a recession, it will be a mild recession. It should not affect the housing market that much, given the data I just shared with you. So hopefully you got a lot of value from this article that I reviewed with the NAR. And if you see the value, please smash the like button and subscribe to my channel as well. And lastly, if you want to become a member of our free member of our real estate investing community, please just put your email into our newsletter on the website below, so you can receive a free weekly newsletter on real estate investment opportunities. Thank you so much. This is Siwon Yi, and I will see you on the next video shortly. Have a nice day. Bye-bye.